Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale. And in this video, I want to talk to you about charitable deductions and how they might benefit you on your tax return this year. First, let's talk about what a charitable donation is. It is a gift of cash or property to a nonprofit organization for the benefit of that nonprofit organization's cause. In that transaction, you are not supposed to receive anything of value in return. However, when it comes to your taxes, you might actually receive something in return. You see, making charitable donations typically benefits the charity, but it also benefits how much tax you end up paying to the government. Now, charitable deductions can be tricky because they go on your itemized deduction Schedule A of your tax return. And not every taxpayer qualifies to itemize their deductions. We made an entire video on the standard deduction versus the itemized deduction, and I encourage you to watch that on YouTube by clicking right here. Assuming you are able to itemize your deductions, the charitable contribution helps save you money in taxes by a percentage of the contribution. What is that percentage? It's your marginal tax bracket. Let's put that all together in an example. You've given $1,000 to your local charity and your marginal tax bracket is 24%. This means that, assuming you itemize your deductions, you will save approximately $240 in taxes on that $1,000 of charitable contribution. Now, let's say you're an extremely generous person and you give away 100% of all the income you earned. Yay you! But you will not be able to deduct 100% as a charitable contribution. You see, charitable contributions actually have a limitation. You can only deduct up to 60% of your adjusted gross income as a charitable contribution. Let's put an example to this. Let's say you made $100,000 this year and you contributed $100,000 to charity. Unfortunately, your deduction is capped at $60,000 of charitable deduction. This is because 60% of $100,000 is $60,000. The remaining part of the charitable contribution, $40,000, will roll forward to next year. Keep in mind that the IRS really restricts the type of organization you can contribute to receive this type of special deduction. The organization must be a nonprofit organization. So think 501c3 charitable organizations, think churches, think private foundations. Many times during tax season, taxpayers will tell me about a family that they helped out in need or individuals that they support and they feel that should qualify for a charitable deduction. Unfortunately, those don't qualify. Lastly, if you intend to take the charitable deduction, I highly recommend that you always keep documentation. In fact, the IRS requires it. Any charitable deduction over $250 must have supporting documentation. Think a letter from the organization saying how much the donation was for, maybe a canceled check or a check image. You'll need to cite the amount donated, the organization you donated to, and the date in which you donated, as well as how much was donated. We hope you enjoyed this video. To keep up to date with all of the information we're putting out, hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.